Stop panicking about Tesla's share registration. Seriously, if you saw the headline, Tesla registers 304 million shares for Elon Musk, and you immediately thought dilution or Musk is selling, you just fell for the trap. Here is the counterintuitive truth that 90% of retail investors are missing right now. Registration does not mean selling. Tesla just filed an SEC document registering 304 million shares for Elon Musk's 2018 compensation package. The stock barely moved, down less than 2% on the news. Why? Because anyone who actually read the filing knows Musk cannot sell these shares until 2033. That's 5 years from vesting, and vesting happens in 2028. That is 7 years from now. Let me break down exactly what this filing means, and stay until the end for the 3 secrets that will change how you read every headline about insider selling. I'll admit something. Years ago, I saw a headline about a CEO registering shares. I panicked. I sold. The stock went up 40% over the next year. I learned a painful lesson. Headlines are designed to scare you. The filings tell the real story. Today I'm going to show you exactly what Tesla's SEC filing actually says. We're going to look at the registration, the exercise timeline, the lockup period, the tax implications, and by the end, you will understand why this is actually bullish for long-term Tesla holders. Stay with me. Let's start with the facts. What happened? On April 21, 2026, Tesla filed an SEC document to register 303,960,630 shares of common stock. These shares are part of Elon Musk's 2018 compensation plan, the famous $56 billion pay package that has been in legal battles for years. The backstory: shareholders approved this plan in 2018. A Delaware judge struck it down in 2024. Tesla moved its incorporation to Texas. The Delaware Supreme Court reinstated the plan in December 2025. After years of legal fights, the plan is finally being implemented. The size at current prices around $378 per share. These 304 million shares are worth over $110 billion. The counterintuitive truth: this is not new dilution. This is a compensation plan that shareholders already approved 8 years ago. The only thing that changed is that the legal battle ended. Tesla is simply fulfilling what was promised in 2018. Now, let's talk about the exercise timeline. Because this is where most people get confused. Musk must exercise these options between May 21st and August 15th, 2026. That is a 3-month window. Coming up very soon, the cost. The strike price is $23.34 per share. To exercise all 304 million options, Musk needs to pay approximately $7.1 billion. How does he pay? 2 ways: cash or shares. If he pays with shares, he would need to sell about 45% of the exercised shares just to cover taxes. The counterintuitive truth? This tax selling is expected. It is not a bearish signal. When Musk exercised options in 2021, he sold shares to pay taxes. The stock dipped. Then it recovered to all-time highs. The market understands tax-related selling. It is not the same as a CEO dumping shares because they think the company is failing. Okay, so here is the most important part that, honestly, every headline is ignoring: the lockup agreement. Under the terms of the plan, Musk cannot sell these shares for 5 years after they vest. The vesting date is January 19th, 2028, and the earliest sale date is January 19th, 2033. That is 7 years from now. Now, what about taxes? The only exception is selling shares to cover tax obligations at the time of vesting. But beyond that, no sales, no exceptions, for 5 full years. The counterintuitive truth? This lockup is arguably the most shareholder-friendly provision in any CEO compensation plan, ever. Most CEOs can sell shares immediately after exercising options. Musk? He is forced to hold for 5 years after vesting. That aligns his interests with long-term shareholders more than almost any other public company CEO. Let me show you why long-term investors should actually be happy about this. Musk's ownership is going up. Right now, Musk owns approximately 11% of Tesla. After exercising the 2018 options and paying taxes with shares, Barclays estimates his ownership will rise to about 16.8%. And there's more. Tesla also has a 2025 compensation plan that was approved by shareholders in November 2025. If Musk achieves all the performance targets under that plan, his ownership could reach 22%, or even higher. Why does this matter? Well, Musk has stated publicly that he wants 25% ownership of Tesla. The more he owns, the more aligned his interests are with shareholders. The counterintuitive truth? Every share Musk gets is a share that is not being sold into the market. He isn't dumping, he's accumulating. This is not a bearish signal. It's actually a bullish signal for anyone who believes in Tesla's long-term future. Let me leave you with the 3 secrets that connect everything we just discussed. Secret number 1. The registration does not equal selling reality. An SEC registration filing is a procedural requirement before shares can be sold. But it does not mean any sale is happening. Always check the lockup provisions. Always check the vesting schedule. The headline will never tell you these details. Secret number 2. The tax sale panic trap. When a CEO sells shares to pay taxes, retail investors panic. Institutions buy the dip. Tax sales are predictable. They are scheduled. They are not a signal about company fundamentals. The smart money knows this. The scared money panics. Secret number 3. The ownership alignment premium. The best CEOs have significant ownership in their companies. Musk is going from 11% to nearly 17% ownership. That means his net worth moves with your investment. When he wins, you win. When you lose, he loses. That is the definition of alignment. So what should you actually do with this information? If you are a long-term Tesla holder, ignore the headlines. This filing changes nothing about Tesla's business. The company is still delivering vehicles, still building Optimus, still rolling out FSD, still expanding energy storage. Musk's ownership is increasing. His lockup is 5 years. That's good for you. If you are a short-term trader, expect volatility around the exercise window, which is May through August 2026. When Musk sells shares to cover taxes, the stock could dip 5 to 10%. That dip is a trading opportunity, not a fundamental crisis. If you are considering buying Tesla, the tax-related selling later this year could create an attractive entry point. But do not wait for the perfect price. History shows that trying to time the bottom on Tesla news is a loser's game. The counterintuitive truth? The best time to buy Tesla is when headlines look scary, but the fundamentals remain unchanged. This is one of those moments. Here is my question for you. Did you panic when you saw the 304 million shares headline? Or did you read the filing and realize this is actually bullish? Drop your answer in the comments. I read every single one. Like and subscribe if you want more myth-busting analysis on Tesla and the biggest stocks in the market. I'll see you in the next video.